Hello traders, welcome back to another video. We are going to break down two setups that we shared on premium channel. Sometimes you find it difficult to find entry in the market, and this caused you to enter an early position and not waiting for the right tradable zone. Don't forget, trading is all about discipline. You can make money fast, but you can lose even faster if you don't have the right attitude towards the markets. The chart in front of you, it's gold versus US dollar, 1 hour time frame. I am going to show you into 2 steps how to identify the high probability entry zones. First step is to identify the liquidity level or support and resistance levels, because they are approximately the same. We must wait for liquidity swept and enter in opposite direction. These reversal moments are better to correlate with other confluences. The second step is to search for supply and demand zones above or below these levels. As we can see, we have a demand zone below and a fresh point of control above the current price level. So, the levels and goals are clear now. We are going to wait for a fake out in upside or downside direction, and probably entering a trade there. We are shifting on 15-minute time frame in order to find an entry as precise as possible. As we can see, price broke above the high and is grabbing the buy side liquidity. After a small consolidation, price showed a strong sell pressure with a significant bearish candle. We could enter at mitigation last bullish candle or immediately. The first option offer a better reward ratio, and I will suggest that. Because most of the times when we enter right after these strong candles, it's inevitable for the trade to float in drawdown for a while. The suggested stop loss is above the liquidity level, and we are going to target the support level or so-called liquidity below. Price dropped sharply on our favor. At the demand zone, we decided to close one portion of the trade and moved stop loss to break even. As expected, price had a small bullish pressure, and after that price made another impulse in downside direction, reaching in this way the final target. Right below this liquidity level, we have the demand zone that we previously highlighted as a potential entry. But I have my own rules, and after a good winning trade, I take a step back from the pair and don't enter the reversal trade. The buy trade opportunity was shared on premium channel, of course. After testing all the demand zone, price lose the bearish momentum and consolidated for a while. After it got enough buy power, it bounced in upside direction, reaching the target. I am not feeling bad when I miss a good trade opportunity that I have in front of the table, because I did it with a full conscience. This setup could have offered a 2.6 reward trade. We focus too much on money and the vast riches trading can offer us. To various degrees, stress, fears of missing out, worries around losing, regrets, and more, are all born of the fascination we have over money. We don't always become aware of this, but it's true. We can't accept uncertainty. We desperately try to create those security and certainty where they just don't exist. This engineers psychological resistance and makes trading unprofitable and annoying. Trading effectively is about assessing probabilities, not certainties. So, rather than wasting time over things that we have no authority over, what we can focus on is evaluating probabilities instead of certainties. We should also focus on finding unequal opportunities and defining our risk prior to entry, because in the end, those are the only things we can control. The second setup is US dollar versus Canadian dollar, 5-minute time frame. The change of trend is what we notice first. After the breakout, price touched a supply zone and pulled back, retesting in this way the support level. We can consider the new low that has been created a liquidity level. In this moment, we are projecting a potential complex pullback. This type of pullback is the same with a B equals CD pattern, a continuation type. We have a 5-minute demand zone below this liquidity that is very close with the completion of the complex pullback. We are highlighting the structure for a better visualization. Once again, we have two swing formation with a complex pullback between. Above the demand zone we have an imbalance ready to be filled by the price. As we already said in previous videos, a demand with an imbalance zone above has more strength and high probability than other who doesn't. We confidently placed the entry there and waited for price to trigger it. We had another demand zone, and for an extra security layer we can shift the stop loss below this level. This was optional. I personally kept the stop loss below the first demand. Price dropped sharply and swept the liquidity level, but unfortunately didn't touch the entry. We missed the trade, and before you know it, the moment's gone. The beginner traders beat themselves up for not making the decision earlier, and tempted to start another adrenaline-filled cycle to make up for what they've failed to do earlier. Stop. Every trader, beginner or even expert, suffers from some kind of FOMO, the fear of missing out on trading opportunities. Yes, every single trader out there suffers from a level of FOMO. What changes, however, is how each trader handles that to make him better at trading. I shifted on 15 min, and I saw a candle closure above the bodies of previous candle. This was a bullish sign that the move is going to continue further, a breakout type of trade. I decided to enter a private trade here and didn't share it on premium, because in some way it's influenced by FOMO, even though the price action confirmation was good. I moved stop loss to break even at this level, and you can see, the bullish momentum was very strong and reached the full target. Thanks for watching the video till the end. See you to the next one.